$100 per month in dividend income on average is a super important milestone I think any dividend growth investor can hit, if of course they stay dedicated and keep investing long enough. Now this milestone is not easy by any means because of course if you're investing into things like SCHD, VIG, or other popular dividend growth ETFs like that, because they only start at a 2 or 3% yield, this is going to take tens of thousands of dollars and could take several years unless you're starting out with a ton of money. But in this video, we're going to go through 3 different methods, 3 different assets that you could buy into to reach the $100 per month in dividend income milestone much quicker, but still in a safe manner. Now, whether you've already surpassed the $100 per month goal or are trying to get to it right now, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first high income ETF that I think an investor could definitely use to help them get to that $100 per month dividend income goal in a relatively safe manner is going to be the SPYI ETF or the NEOS S&P 500 high income ETF. Now, this ETF strategy is pretty simple. They buy into the constituents of the S&P 500, and with utilizing a covered call strategy, the ETF not only has exposure to upside when the market moves up, but also no matter what, this ETF is going to be generating a ton of option premium, which is how they pay out so much to investors in the form of dividends every month, which we're going to go through here in a second. Now, I said these are all going to be relatively safe options because of course there's different ETFs across the market that pay a ton of dividend income every single month, but ETFs that I would consider far from safe. Now, an example of this is perhaps the TSLY ETF, which is down 43.25% on the 1-year time frame. So even though TSLY, for example, pays a 94% trailing 12-month yield, more or less, the ETF is far from safe in my opinion, at least not as of right now, because the ETF has been decaying and decaying and decaying. But with SPYI, for example, although this ETF hasn't been around all that long, the strategy seems very sound, which is why personally, as a side note, I've been buying tons of shares of SPYI over the last year. But like we talked about, because the cover call writing strategy, SPYI is able to generate a ton of income for investors every month. We're talking around 12% trailing 12-month dividend yield. And with every single share that you own of SPYI, at least up until this point, it looks like you're going to be receiving around 50 cents, maybe 48 cents on a monthly basis for every single share that you have. Now, just to do some basic math here, if the goal, of course, is to get to that $100 per month on average dividend income goal, and SPYI pays around 49 cents per share per month, more or less, that means an investor would only need 204 shares of SPYI, for example, to get to that $100 per month goal. Now, because SPYI is around $49 per share, an investor will need to spend around $10,000 into SPYI, specifically, of course, as an example, to get to that $100 per month dividend goal. Now, just as another side note, what I personally do for my long-term dividend growth portfolio is I buy into things like SCHD, like DGRW, different foundational names, but then I also sprinkle in some higher income names like this one. And that's because over time in my portfolio, I want to be exposed to different stocks and ETFs that have growth potential, but also I want to generate a lot of income and I want it now. Another ETF that an investor could utilize to reach that $100 per month dividend income goal a lot faster is going to be the SVOL ETF or the Simplified Volatility Premium ETF. Now, SVOL has an interesting strategy. They short the VIX and generate a ton of premium by doing so. Now, this ETF does have an expensive expense ratio at 1.16%, so keep in mind, because of some of these strategies, the ETFs that we're talking about in today's video, they are going to be a little bit more pricey to hold on to. But being up 2.33% along with a dividend yield almost 17% is going to allow an investor, if of course the goal is to help them get to that $100 per month milestone in dividend income, it's going to help quite a bit. And this is because SVOL, although only being around $22 per share as of right now, the ETF very consistently pays 31, 32, or even more than 32 cents on a monthly basis to investors. This means that in theory, going off of the previous numbers, if an investor wanted to get to that $100 per month goal, they would need to purchase 333 shares of SVOL, which are currently around 22 bucks. So we're talking only $7,300 in order to reach that massive milestone of $100 per month in dividends. Now, like I said, I personally utilize these sort of names as sort of a satellite position in my overall portfolio, and I'm going to show you guys all my portfolio towards the end of this video, so stay tuned. But if you're an investor like myself that wants to consistently raise your dividend income along with building out a foundational portfolio, something like SPOL as an alternative option could definitely be useful and most likely worth looking into. Now, the last and final ETF that we're going to be using as an example on how an investor could really raise their dividend income quickly and reach that $100 milestone, which I think is so important, is to invest into FEPI or the Rex Fang and Innovation Equity Premium Income ETF. Now, this ETF has a basket of holdings that are very high beta, names like Tesla, Alphabet, Adobe, Apple, etc., etc. And then you guessed it, by utilizing options, cover call overlays, this ETF, at least so far meaning since October of last year, so not all that long, has been able to squeeze out a small green 2.67% as far as price return, but maybe more importantly, especially for what we're talking about in today's video, this ETF has generated massive dividends over time. Now, for an ETF that cost around $52 or $53, we're talking a $1.09 dividend, $1.19 dividend on a monthly basis, which is massive. So much so to the point where if an investor, just going off of the previous numbers, wanted to reach that $100 milestone from dividends just from FEPI, for example, an investor would only need to purchase. Now, names like these I'm always wary of because they haven't been around that long. We don't know how this is going to trade long term. It has a lot to do with underlying holdings and the way the market moves from here. Of course, along with management and other things. But like I sort of been touching on throughout this video today, having different names in your portfolio as sort of anchor positions. For example, in my portfolio, having 1,000+ shares of Devo, having 1,000 shares of Apple, having a ton of Realty Income, JP Morgan, etc. Along with having 600 shares of SCHD, I also do not mind having a small position in things like SPOL, or a small position in things like FEPI, or even SPYI. In all, it really depends on your own strategy. If you consider yourself more of a dividend income focused investor that doesn't really care about growing the portfolio but wants dividend income and wants it today, well then by all means that's going to be a different strategy than that of an investor like myself that of course does want income and does want it fast, but also wants the potential to have their portfolio to grow over time. But either way, I definitely think it's important to get your portfolio up to a certain point to where it's generating a decent amount of cash flow on a monthly basis, because I know how psychologically important that is, especially for someone that's went through every single milestone, all the way up to where I'm at right now, earning around $6,300 per month in dividends. But lastly, now I want to hear from you guys down below. Out of all three names we went through in today's video, we talked about SPYI, we talked about SPOL, and we talked about FEPI. If you, for whatever reason, were an investor looking to add some income to your portfolio by investing into any three of those names, which one of those would you buy if you could only choose one, and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.